Guys, how we doing? I'm Ryan Mack. Welcome back to Train Guys, and today we're going to cover fundamentals with a bit of a spicy week last week on gold. It was fantastic if you caught it. More so for scalping, a little bit of kind of intraday trade. You could have held it for a while. This one here, you can see here, guys. Look, this is a paper trading. I'm not trying to pretend that's fucking real. You all know if you watch my videos. What I do is on. So I have 5 live accounts, 5 different live accounts. As you can see, there's one XNES, there's Darren Zero, and then there is another one. There's another 3 across here. FX, 2 FX pigs, and iQuoto, 2 iQuotos. Sorry, fucking hell, 6. So this one here is paper trading. As you can see, the reason why I still use paper trading after about 8 years of trading is whenever I want to try something new, you know, because you're always learning in trading, guys. You're never just going to get there and be like, fucking hell, that's it, I'm done for life. Yes, you will have your method that you prefer, like I already have, like Leo already has, my friend Raja Banks already has. However, like anyone else, you know, education never ends. Doesn't matter if you're in trading, doesn't matter if you're in something scientific, biology, mathematics. There's always something new coming out, so you always have to, if you ever want to try something new, like, oh, that looks fucking decent, let me see if this guy actually knows what he's talking about, or if it's a load of shit. Then you don't want to be trying something new and finding out it's a load of shit with a fucking live account and your own live money, right? So it's always a great idea. Even after 8 years of trading, I still play around with paper trading. This was predominantly for futures. My mate Dan, who's a phenomenal trader, he was actually teaching me futures, so that's why I opened up this one. But I have been doing more on it. I've been doing like gold and like loads of different things that I don't normally do in my live accounts, different methods and techniques. And you can see here, started off at 100k, obviously paper, and it's now up 8,200, so it's going quite well. Moving on. So guys, as always, what you're going to do is get your notepad and pen out. We're going to write currency strength or economy strength, whatever you want. I just stick to currency strength now. Pardon me. And right here, you're going to write strong, weak, and neutral. Can you see that right there? Strong, weak, and neutral. Okay? Now, the reason why you do that is because at the end of going through all these, when you're going to have a list of certain strong economies, certain weak economies, and certain neutral economies, right? You're going to ignore the neutral ones after that. You're then going to match up a strong economy with a weak economy. And that's how you know if you're going to be taking buys in a pair or sells in a pair. That's how you fucking know, right? Now, you'll see many people, they'll draw fucking lines on their page, right? And they'll be like, right, when that fucking breaks here, I'm going to buy it or I'm going to sell it, and then it fucking melts the opposite way, right? That is fine for marking up your area of entry, you know? Putting a box fucking somewhere down here or putting a line somewhere here, that's fine for you saying, right, break and retest. That's where I'm going to enter, so it's marking up your potential entry points, right? That's fine. But when you're doing long-term trading, I'm not talking about scalping here, it's a whole different ballgame. When you're talking about day trading or swing trading or position trading, drawing lines and fucking boxes on your page should never be the reason why you're entering a trade in a buy or in a sell. It should never be your reason why I'm entering buys or why I'm entering sells. And if you think about it logically, if you're a big London banker, right, and you've got a $5 billion account, do you think for 1 minute you're going to enter a buy just because a candle broke past the stupid fucking line you just drew on your page, right? The answer is no. Of course they're not. Why? Because they're not fucking maniacs. That's why. They choose a reason to enter a trade based on fundamental information and data. Based on the economy. So GDP, average earnings, manufacturing, is it above 50 bullish? Is it below 50 bearish? Services PMI, CPI, PPI, credit card spending, mortgage approvals. You know, there's unemployment, employment, there's tons of shit. So a reason to enter a trade would be, I'm just going to use GJ because we're on it. You look at pound and you're like, right, unemployment is low, fantastic. Employment is high, fantastic. average earnings is high, which means people are earning more fucking money for doing the same job they were doing a year ago. What happens when people earn more money? They buy more shit. So it stimulates the economy. If you earn more money in your job, you're not going to say, oh, fucking this is fantastic, I can now save more money and put money away in the bank. Nobody does that. Even I didn't do that. I used to buy more shit. I used to upgrade my car, used to buy a better fucking phone, used to buy jackets that were fucking expensive and pointless. You know, we've all done that stuff, right? And that's exactly what people do. That's why they call us consumers, because we fucking consume a load of shite like termites. So when your average earnings is up, it means that people are earning more money. When people are earning more money, they're buying more shit. When they're buying more shit, what is that doing? It's stimulating the economy, which is then good for the economy, right? It's dead simple. Honestly, fundamentals, when you look at it in its base term. Credit card spending, why is that? Well, it just means people are spending more money on credit cards, you know, and then they're going to still stimulate the economy. However, when that drops, it's not a good thing, because it means that people then aren't stimulating the economy, okay? Employment being high, of course, more people in jobs is good. Unemployment being low is not good, because there's more people out of jobs. So it's like, well, why does that have a major effect? Well, it's not just about people being in a job or out of a job. If you're out of a job, most people in the fucking Western world, and I was in this boat for a very fucking long time myself, because we have a huge support system in the UK, right? So we don't feel that we need to have a lot of money in the bank. You think, oh, fuck it, I'll just sign on, I'll get money. Whereas a lot of countries in the world don't have that. So they're more focused on, fucking hell, I need a bit of safety net here, right? And we don't really focus on that in the West, America, UK, and so on. So, and that's just, you know, it's just part of our, you know, the way we are. So what happens is if there's more people unemployed, most people in the world only have enough money to pay their bills for 1 month up until a maximum fucking 2 months. After that, they're like, fuck, if I don't get a job this month, I am fucked, because I've got no way to pay my bills next month. And I've fucking been there, by the way. It's horrible. So that's the way most of us work. So when you see unemployment for one or more consecutive months going down and down, unemployment going up and up, and employment going down and down, that's fucking bad, because you know what's coming. You're like, this isn't sustainable. So if unemployment keeps increasing over 1, 2, and 3 months, then you know it's consistent, right? If it's just 1 month, the numbers are bad, it's like, okay, it could have a bad month. It doesn't really have a massive effect. But if you start to notice a consistent pattern of, holy shit, last month unemployment had increased, this month unemployment's increased, you know, next month it's looking to potentially increase again, then you know that that's going to be really bad for the economy. You're going to get people bouncing on credit card payments, bank loans, mortgage repayments, cars on tick. They're not going to pay their fucking Sky bill. They're not going to pay their internet. And it's just a fucking horrible spiral, right? So that's why small things like unemployment can be such a large indicator, and why we like to see it, okay? It should all make sense. So now what we're going to do is we're going to jump across 2 fundamentals here. We're just going to go through them together, right? And we're going to write down which economies are strong, which economies are weak, which economies are neutral. So for fundamentals, when I run through it on Forex Factory, okay? Because it's much easier. Look, for me to select the countries, it's really dead easy for me to select it here. During the week, when I'm keeping up to date, you know, on a daily basis, I don't spend all day fucking staring at the screen, guys. I have a quick look at the end of the day and be like, all right, that was a good number, that was a bad number, blah, blah, blah. You know, I don't sit here the whole fucking day with my eyes glued to the screen. This is much better. Excuse me for getting data. It's called tradingeconomics.com, right? It's far better. You get tons more information and data. Like if you go across to China on Forex Factory, you might have like 6 things, whereas here you've got about 10 things. You know what I mean? So you get far more data, and the data comes out far more quicker. The reason why I don't use it for the run through, excuse me, is because, well, look, when you select the countries, it's a fucking nightmare. You know, you spend your whole day jumping around, clicking this, clicking that. So that's why I don't use it for doing my fundamental run throughs. Okay, bloody hell there. There we go. And there's tons of data on here. Come across to Trading Economics and have a look. You don't have to just look at this. You can go back. You can look at gold specifically. You can look at copper. You can look at write-ups and what its projections are. It's fucking amazing, guys. This one here is called Prime Market Terminal. Right, wait, I'm going to... yeah, it's called Prime Market Terminal. I'll move this out of the way. Give me 1 second. There we go. So look, you've got all your different currency pairs here, right? It is just a phenomenal tool. I absolutely love it. I'll move this. And when you select a pair, you then get things like overview. Hold on. I'll just quickly show you this. It's brilliant. So this is like information and data, right, based on banks and so on and so forth. Overview tells you, I don't know why that's not going up. It's probably because I've zoomed into my screen. That's why it looks a little bit shitty. I've zoomed into my screen so you guys can see it, but it's actually a really good setup. You don't have to use every single one of these. The reason why this platform has so much data and information is because they've made it for all different types of traders. So like everybody, doesn't matter which way you trade, you can use this. If you want to purchase this, you can get the link down below. I've put it in there, and I've also have a discount link in there for you, a discount code in there. I think when you click the link, it automatically gives you the discount. All right, so if you don't see a discount code there, then it means just click the link. It'll already have the discount embedded in it. And this is a phenomenal tool. You get market structure, volatility, trend. I don't use that. I use overview for a quick look. I use seasonality. So what seasonality does here, right? It takes the data from the last 5, 10, and 15 years and it compiles it together, and it tells you on average over the last 5, 10, and 15 years, this pair, what we're on now, October, is mild buys. But then November, you're really looking to sell it, right? And in December is historically buys. You can't just buy based on that, but it is quite a good indicator, you know, of patterns. You can look at pattern here. I don't bother. It gives you percentage ratios. The ones that I do care about is DMX, which means Dumb Money Index. It's basically retail traders. So look, I'll give you a prime example. See here on the 23rd of October, this shows you that retail traders are predominantly in sales, right? They went from being in buys to being far more in sales. Now, retail traders don't have a fucking clue what they're doing. That's why they always lose. That's why you can always make money from them. And when this goes up, you want to be doing the opposite of these fuckers, all right? If you look here, you can see it's very easy to see it there. They're predominantly in sales again and buys. This, I'm going to show you in 1 second. So, in fact, I'll just show you now. Fuck it. So, COT is what's called commitment of traders, right? This is the banks and the big institutions. This is what they're in. So, if they're predominantly in sales or predominantly in buys, it will tell you here. It will tell you if it's it changed any, you know, open interest 160, so they've actually increased. They've increased their long positions. Their short positions are far more increased, you know, so like long change isn't much, but the short change is massive. So they're predominantly in shorts. Now, when it comes to like big institutions, and you'll be like, well, why are they in buys and sells? Well, they do hedging. You and I, we will have, let's say you have $100,000 account, for example, right? You don't trade that 100 grand. You trade 1% of that 100 grand, or 0.25% of it, or 0.5%, or 2%, or a percentage of that whole portfolio in one trade, right? You do not trade your entire 100% of your money in that one trade. However, large institutions tend to do the opposite. They tend to have all of their money in the markets, and what they'll do is they'll hedge it, so they'll have a larger proportion in the way that they see the market's going to go, i.e., you know, sales in this example, and they'll have a small proportion in buys just in case it goes the opposite way, and they can still fucking keep a hold of their portfolio, right? That's how they base it. So let's have a look at DMX, and you can see here, look, we've got on the let's just say 23rd to 24th of October, retail traders lumped into buys. You see this crossover. Whenever you get this cross, it's fucking brilliant. So at this point, the 23rd of October, we want to potentially be looking for sells. So let's have a look. What was that on? Let's just see the pair, sorry. AUD CAD, right? So let's come across the AUD CAD. Let's just go to the 4 hours so it's easier to see. And we want to be looking at the 23rd of October. 22nd, look. 23rd of October is right here. This blue candle right here. Retail traders entered sells. Fucking sells. What did the market do? Look, bang, bang, bang. It fucking flew. So this is why I love using this tool. Whenever I see this crossover, it's like happy fucking days. You want to be using that. Now, you'll see there's a crossover here. Like, oh, why didn't you take buys? Because based on fundamentals, the Aussie was strong. the Canadian dollar was weak. So I know that when I see this mild crossover here and there's more in buys, I don't enter sells. Why? Because I know I'm not looking for sells in this pair based on fundamentals. This is where you get the data from, right? So even though I see this, I know, right, I'm looking for buys. I see this coming down and I don't enter sells. I just ignore it because I'm not looking for sells. I'm looking for buys. Then when you see this, bang, you see that flip, boom, away you go, enter, and off you go. And you can see here, look, it's already in my area. Look, small candle, large engulfing, boom, 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 boom. Look, small candle, large engulfing, small candle, large engulfing. It's already in my area of value to buy from. So you see how everything there has lined up. The fundamentals lined up. The Aussie was strong. The CAD was weak. It's came to an area of value. It's then crossed over on retail sellers have went into sells, which means that retailers are the liquidity for the large institutions, right? So you see how there's all these little pieces of the puzzle that are all fucking lining up to come together for me to decide to take this trade, and I already know what I'm looking for as in terms of buys or sells, right? It's not just about drawing a fucking line on your page and be like, oh, when that candle breaks, I'm going to enter it. Nobody does that. If you think a banker does that, you've lost your fucking mind. So, moving on, let's have a look at this here. Let's go through the pairs. As you know, if you always watch my videos, you will see that I always do each country / economy individually, except from Aussie, China, and New Zealand. I always do those three together because they're what's called positively correlated, right? So if China goes up, Aussie and NZD will go up. They're positively correlated. If China comes down, AUD, NZD will come down. AUD and USD are what's called negative correlation. So if the USD is up, Aussie is normally down. If USD is down, Aussie is normally up. So they cross over each other. It's called negative correlation, right? They oppose each other. So this week, what are we on? Okay, so we want to look at last. What are we there? 25th. Oh yes, okay, that's still this week. Okay, so we've done last week's. This is this week. Let's have a look. CPI quarter on quarter. That's bullish. Stagnant. Still, it's steady. You know, it's not neither strong nor it's steady. GDP quarter on year is 4.8. Now, here's an important one. You see that 4.8 is in green, right? Don't get caught out by that and think, oh, it's green. That must mean it's bullish. No. Look at the previous. It was previously 5.2%. It's dropped from 5.2% down to 4.8%. That's bearish. That's negative, right? So why is it green? Because look, it was forecast to come in at 4.7, and it's came in 1 point, or 0.1, I should say, better than the forecast. So Forex Factory puts that as green because it came in better than anticipated, right? Which is a little bit of a red herring, because if you don't know how to read this properly, you're going to just look at that and you'll be like, oh, it's green. You're going to see the numbers 5.2 and 4.7 and 4.8 and be like, oh, it's green though, so it must mean it's good. No, it doesn't mean it's good. All right, lads. It is negative because it has dropped from 5.2 to 4.8, so don't let that catch you out. Industrial production year on year has increased by 5.2 to 6.5%. That's fantastic. Retail sales year on year has dropped. Unemployment rate in China has dropped, so that's quite good. That will be to do with industrial production increasing, so then employment increases, right? You see how it all, if industrial production goes up and increases, what happens? They need to open more fucking lanes in the factory. To open more lanes in the factory, you need more employees, you know? So you can see how everything rolls on to each other, right? And then, yeah, and that actually rolls even further. If you have more employees, it means more people getting salaries. More people getting salaries, more people are paying their mortgage, more people are paying their car tick, more people are paying their internet bills, you know, blah, 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 blah. So, you see how that rolls on. The US government still appears to be shut down, so we need to wait till it reopens and then numbers can change. Unemployment rate, yeah, sorry, we covered that. Trade balance has dropped, so it's negative in New Zealand. So, when it comes to trade balance, some countries it says trade balance, some countries it says account balance and stuff like that. So you get two things. You get a deficit, which is a minus, like you see here, and then you get a surplus. Whereas if that was green and it didn't have a minus sign next to it, right? So if it's a surplus, that means the country is doing well. That's fantastic. It means they're exporting more than they're importing, i.e., they're selling more shit than they're buying more shit. That's exactly what it means in layman's terms, right? So, and if they're selling more stuff, it means they're making more money, right? If you look at New Zealand here, it said the trade balance is minus 1355, right? So that means they're buying more shit and they're not selling enough. So they're in a deficit. They're in their fucking overdraft, right? That's how to look at it. Credit card spending year on year has dropped, so that's not good. That means the economy is not getting stimulated. GDP price index, still shit. I mean, it's increased very slightly, but it's shit. Still minus 1.4. Flash manufacturing PMI in Australia has dropped from 51 to 49, which is bearish. Very easy when it comes to PMI, whether it's manufacturing or services. It's dead easy to work out, guys. You don't have to concentrate on the exact number. If it's above 50, it's bullish. If it's below 50, it's bearish. It's dead easy. So let's say this one here was 51.4 and it dropped to 50.1. Even though it's dropped, it's still classed as bullish because it's above 50. It just means things are slowing down, right? But now that it's dropped below 50, it's 49.7. You can definitely see things are dropping, and that's bearish, i.e. weak for the currency. Flash services PMI is 53.1. That's increasing. That's fantastic. I mean, every single country has manufacturing and every single country has services, right? But not every country is a manufacturing country and not every country is a services country. The UK, we have both, but we're not known for manufacturing, right? Where we provide services, banking services, this, that, the other. Money laundering services for Russians that they try and hide. And then if you look at Japan, Japan has services, but what is Japan known for? It's known for being a manufacturing country, right? Same as China. China's a manufacturing country. Germany is a manufacturing country, predominantly, right? France is a services country. What else have we got? New Zealand makes most of its money from lamb, milk, and dairy goods, right? Because it's a kind of farming country as overall. Excuse me. And then Australia, they are heavily reliant on mines, right? It's a massive fucking mining country for gold, silver, tin, copper, iron, you name it. That's why if China production and manufacturing and everything increases, that's why it's good for Australia, because they buy 80% of their shit. It's their largest trade partner. So if production, manufacturing, blah, blah, blah increases in China, then they need more stuff to put into the fucking machines. Where are they going to buy that from? Australia. So that's why China going up is good for Australia going up. If China comes down, that means they're going to stop buying more shit, which means the mines are going to stop working. They're going to be selling less produce, and that is then why AUD comes down, right? That's a real layman's terms way for anybody to be able to understand how that works. So again, I am keeping... I'll just write this down here. AUD, I'm going to keep in neutral for now because it is kind of neutral. CHF, Swiss franc, I'm just putting that in neutral because it's always neutral. I don't even cover that anymore because it's, like I explained before, Swiss franc, you never really trade Swiss franc based on data like this. You know, manufacturing's never up, services is never up nor down. It's always very flat. You trade Swiss franc based on market sentiment. So it's either a risk-on sentiment, which is 98% of the time, markets are always risk-on, or a risk-off sentiment, which we've kind of seen this last week or two, right, where the markets, there'll be more risk-off. So if markets are risk-off, you want to be buying Swiss franc. If markets are risk-on, you want to be selling Swiss franc. It's that easy when it comes to trading the Swiss franc, all right? Neutral, and I've got Aussie neutral, Swiss franc neutral, NZD, I'm keeping it in weak because it's shit. And China, of course, we don't write down China because we don't trade it, but we just have to see it because it gives us a clear indication of if we're looking for buys or sells in AUD and NZD. All right. Before I change this, let's have a look at next week, see if we've got any news coming up. Bank holiday Monday for New Zealand, China, foreign investments. We want to see that. CPI for Aussie next week. We've got quarter on quarter and year on year. We want to see that trim CPI. So that's going to be Wednesday. I won't be here, so keep your eye on that, right? I'm actually getting back on Wednesday. I'm away to do some YouTube stuff. But anyway, when we cover the markets, you're going to see there isn't really much for my method to trade. I've just been really scalping. Sorry, I got bloody itchy nose. I've just been scalping gold just now because there's really fuck all happening. We did catch a blinder of a trade on Aussie Japanese yen. If you watched maybe 2 or 3 videos ago, you would have seen that I gave you that trade. If you took it, well done, because you would have been up about 4%, so good on you. If you didn't take it and you missed it, don't worry. You're always going to miss trades. There's plenty of times where I've sat in front of my screen, I've called a trade out, I've sat down, and I'm like, fucking hell, I've missed it by 2 days and it's flew and it's too late to get it. That's going to happen to you for the rest of your trading life. Don't worry about it. Don't start fucking chasing trades, trying to catch it after it's already moved. Don't do that. That's how you're going to lose money, all right? You just have to brush it off and be like, fucking hell, I missed it. I'll come back, next time. It's like, you don't chase a bus. If the bus drives past you just as you get to the bus stop, you don't fucking chase the bus down the street, right? You just wait for the next bus to come. Well, that's exactly what you do in trading. AUD, yeah, we've got CPI next week. Quite a lot of them want to see that. We've got PPI. So the difference between PPI and CPI and why they're important is when PPI comes in, you can kind of tell where CPI is going to go. PPI and CPI are just the same. It's just that PPI is for companies and CPI is for consumers, right? That's the difference. So CPI is the cost of things going up that you consume, i.e. the price of butter, going from £3.40 to £4.20, the price of a litre of milk increasing, sausages increasing, fucking washing up liquid increasing, the price of petrol increasing, all this kind of stuff. That's CPI. PPI is the cost of manufacturing companies buying stuff. So for someone to make this microphone, right, look at all the different parts that are in this microphone. So before this became a fucking metal stand and a microphone, some production company, just bought shit tons of sheet metal, right? And then they heated it and they molded it to become a microphone stand, right? So that's what PPI is. So if the price of PPI increases, that means it's now costing manufacturers more money to buy this original metal. Not this, but to buy this original piece of metal or steel or whatever it is to then produce this item, right? So that increases. Now what happens if the price of buying the steel increases? Well, they're not going to fucking take that hit because they want their profits to either stay the same or increase, right? So they put that price on to the companies who are buying it onto, your local little fucking hardware store who's going to buy that product from them. Now, if the price increases for them to buy this fucking metal frame, what are they going to do? That means their profit's less. No, they're going to increase the price to their consumer, which means CPI is then going to increase, right? So that's why bankers and big institutions like to look at what PPI is, because if PPI increases, even if CPI has already increased here, right? Well, when you get PPI afterwards, you can then think to the future, okay, if PPI is increasing this month, then next week or next month, whenever PPI comes back out again, there's a high chance that CPI is going to come out higher next month. Why? Because this is increased, and that means next month they're going to have to increase their prices onto the retailers, and to the wholesalers, sorry. And then the wholesalers are going to have to increase their prices to the retailers, which is then going to increase CPI next month. So I already know, in my mind, potentially, if this comes in, CPI next month is going to be higher. So I then know, is that good or bad for that particular currency going into next month? So what are you doing then? You're predicting the way the markets are going to go. You're predicting, is it going to be more bearish or more bullish, right? And that's how you kind of piece all of this together. I know it sounds hard in the beginning, but honest to God, see if, how every single Sunday I do this. If you did this every single Sunday, I'm telling you right now, by between 4 and 6 weeks, you're going to be able to do this so fucking fluently. You're just going to be able to rattle through it. I promise you. It will come. You just have to do it. So what I used to do when I used to practice this stuff, right after my mate Dan taught me it all, he used to do his again a Sunday, kind of same like me. I used to do mine on a Saturday before I watched his, and the reason why I did that is if I watched his first and then I came across, there's about a 95% chance my brain's just going to copy what I've already fucking watched and be like, oh yeah, AUD's bullish, and I'm not actually able to to distinguish that it's bullish by myself, you know, because subconsciously I already know it's bullish because I've just watched his video, so that's not going to help you, right? What you need to do is, you need to jump on here, do all of this yourself, and then come back and watch my video. You can either do it right after it, or you can do it, you know, the next day or whatever. I would say doing it the same day, maybe just take a break and do it the same day is better, because then you're going to have fresh in your mind what you thought, and then you're going to be like, oh fuck, why was I wrong there? Or why was, oh, it doesn't even have to be wrong. Why was my interpretation different from his? You know what I mean? And it's going to help you that way, okay? So let's move on, guys. The next, I'll move on quickly through this because we don't need to discuss as much in this video. Because I've already gave you loads of golden nuggets, right? And sometimes it can be a little bit overwhelming if I tell you too much each video. That's why I break it up. So this week we had CAD, bullish, 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 stagnant but bullish. They thought it was going to be less. It was bullish, bullish, bullish. So we had a good week for the Canadian dollar, right? But remember what I always say to you, just because it's a good week, it is just a fucking good week. It doesn't mean the economy is all of a sudden booming just because I've had one week of good numbers, right? Yes, it's great to see. Yes, you'll probably see some bearish momentum in some CAD pairs on the short term, but it's not, you know, if you were scalping, you might have been buying CAD that week for scalping, right, on certain pairs. But I would by no means be buying the fucking Canadian dollar right now because it is a bag of shit, right? Their economy is fucked. Oil has been coming in slightly better that week, but again, look, I'll show you it right now. Where's oil? Here it is. Look, if I come to the higher time frames, all we've done, look, we've just, sorry, didn't mean that there. There we go. All we've done, look, you're still sells, look, you're still selling it, right? Even though it's coming up, yes, you could buy from here because it's a good area of value to buy from. There's tons of value to buy from here, but I wouldn't be. I'm now just waiting for sales to either reject here. If this gives me a candle rejection here, I'd be selling this fucking thing. I'd really want it to come up and reject here. That would be even better. And it'll probably go this up, boom, boom, people enter buys, and then it'll reject here, and it'll just start melting again. For me, personally, oil is still sells until we see some really solid, hard data, right? But that's some good data there for Canadian dollar. I'm not moving it. Just because you've got 1 week of good news, it doesn't mean you move it. So previously, CAD was weak, and I am still keeping it in weak, right? However, just for context, remember when I'm saying it's weak, I'm basing it over the grand scheme of things, the big picture, right? You might look at CAD this week and it's showing strength and it's going strong, and you're like, hold on a minute, Ryan said it was weak and it's fucking flying. He's talking shit. I'm not talking shit. You're just looking at the intraday stuff, right? So it could potentially be strong when you're like in that intraday, like I've just shown you for the scalping and intraday trading. But I'm a swing trader, so I wait for it to hit those large areas and then I just hold it, right? So both are correct. You can say one is strong, one is weak. However, the most important thing when you're doing these reviews is you need the context of what I'm talking about, right? So I'm a overall large scale trader, large time frame trader, and you might be a scalper, so you're just looking at getting 10 pips and fucking off, right? So that's very important when you're interpreting this type of information. Let's see what we've got coming up for next week. Oh, big red week. Overnight rate, they're looking at potential rate cuts. Now, let me cover rate cuts. They're looking at the rate dropping by 25 base points, which is from 2.50 to 2.25. Now, you get people that just go, oh, if it's a rate cut, that means it's going to be weak and it's going to melt, right? And then they'll be looking to fucking sell CAD. They'll see the number come in and it'll hit 2.25. And they'll be like, oh, they cut rates, I'm going to fucking sell CAD. They'll enter a sell, and all of a sudden, CAD will start fucking flying. And you'll be like, what? I thought rate cuts meant bearish. Well, again, you need context. Context is very important. It's not a rate cut that makes the drop in inflation bearish. Central banks are trying to get inflation down to 2% safely without crashing their fucking economies, right? So they bring it down slowly. Now, if we get to Wednesday next week and the overnight rate comes in and it has been cut by 25 base points at 2.25, you're probably not even going to see the market move whatsoever because it's already been priced in. I.e., all the big institutions have already penciled this in. They've already started. They've already entered the trades for that fucking 2 weeks ago. They're not interested in, they're not, the minute if that comes in at 2.25, They already anticipated that and they already prepared for it, and it's called already priced in. They already entered that trade fucking 2-3 weeks ago, right? Now, if it comes in at 2.25, the market probably won't move, or it might even give you a little bullish reaction, and that's when people get confused, like, how the fuck is it bullish, blah, 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 and it's what I've just explained about priced in. Now, what makes it move bearish is if we get a shock to the system, right? We get a, holy fuck, where did that come from? So if the forecast is anticipated to come in at 2.25, and it comes in at 2.00, that's a shock that people weren't anticipating. Or even if it comes in at 1.75, even worse, that's a massive fucking shock that people weren't anticipating. So yes, at that point, when there is fear in the market, it's like, oh fuck, I wasn't expecting that, then you get a massive bearish reaction when there's a rate cut. It's a rate cut which has not been anticipated, you will get a bearish reaction, right? If it's a rate cut like this, where it's anticipated to come in at 2.25, and it does come in at 2.25, that's not a shock to the market. Everybody was expecting that to happen. So there's no fear in the market, and therefore it's not going to give you a bearish reaction. All right? So next week, keep an eye out for that. All right? So for me, Canadian dollar, I've still marked it down as weak, because overall their economy is turbo shit, right? CHF, I don't even bother looking at it. Like I explained, CHF is just... you don't really trade it based on data like this, because it doesn't really move based on data like that. It moves based on risk on sentiment, risk on and risk off sentiment. Okay, if markets are risk on, you want to, in layman's terms, you want to be kind of looking to sell Swiss franc. If markets are risk off, it's a safe haven currency. You want to be looking to buy Swiss franc. Okay, against a weaker pair. Last week, right, we're on Euro now, the Eurozone, let's have a look. Bearish, 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 because unemployment has increased, bearish, 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 bullish, bullish, bullish. So that's kind of mixed data there, you see that? That's a lot of mixed data. And what did I have? Eurozone, I had it in bullish, strong, but I had it as weak bullish, remember? I noted it down as weak bullish. Let's see what we've got. So you could kind of have it in between weak bullish and, you know, some might say neutral for now. I'm just going to keep it in weak bullish. If I see more of a change, because it's kind of stagnant, I'll then move it to neutral later. But for now, I'm still going to keep it in weak bullish. I'll just remember in my mind it's weak bullish, right? Next week we've got GDP again for Spanish and Italian. We don't really care because their economies don't really have that much of a sway in the markets. We do look at it, but we just don't really care that much. The countries that we care about in the Eurozone are Germany and France, right? Because they're the largest economies, and they're what really works. French consumer spending, we want to see that. So look, we won't cover it all individually. We want to fly through this. There's a big week next week for Euro, so let's see what we've got. We've got CPI, flash estimate, main refinancing, unemployment rates, and so on and so forth, right? So we've got a big week next week for the Eurozone. I'm just going to keep the Euro in strong, but in my mind, I just know that it's a weak strong, right? It's not massively bullish. You could even potentially look at it as neutral for now, but I'm just not going to change it until I get more solid information. Only because you can see there we've still got mixed data, right? If all of that was weak, then it'd be like, right, we're now moving it to neutral, but we still have a bit of resilience there. That's why I'm not doing it. Let's look at last week on pound. A little bit bearish, bullish, bearish, 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 bearish. Why is it so many PP outputs? April day. Oh, it's giving you all the different months. Okay. Bullish. Why is it doing that? Okay. God, we've got tons of it here. Bearish, bullish, bullish, bearish, bearish. CPI is sticky, so it's red. It came in less than anticipated, but look, it hasn't dropped, so it's still sticky. So it's showing resilience, right? It's showing resilience here. That's CPI year on year, so that's quite good, actually. This has dropped slightly. Core CPI year on year has dropped slightly, so that's bearish. Bearish, 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 bearish. HPI, bearish, but came in better than forecast. Consumer confidence is getting slightly better, but still shit. Retail sales is bearish, but better than anticipated. Bearish and bullish. So, yeah, GBP, I am going to move GBP over to neutral now, because that's been a couple of weeks, it's been pretty shit. And you can see that's not really mixed data. You might still be able to keep it in your mind as a week bullish, but I'm not. I'm actually going to move it now over to neutral, okay? Next week, we don't really have a lot. Mortgage approvals we want to look at. Net lending to individuals. Why we want to see that? It's net lending. If that increases, that means the banks are giving people more money. What happens when people get more money? They buy more shit, right? That's exactly, and it stimulates the economy. So that's why if net lending goes up, that's bullish for the currency. If net lending goes down, it's bearish for the currency, okay? What have we got next? I think we've got two more. Japanese yen and USD. So that's us nearly finished, guys. And then I'll show you the markups, right, potentially for next week. I don't think there's many, to be honest, but we'll have a look anyway. Trade balance, Japanese yen is shit. CPI has increased year on year, that's okay. Manufacturing has decreased, so it's not good. It's 48.3. Japan is a massively manufacturing country, so when they're manufacturing shit, their economy's shit. They've got a new president, prime minister though, and she's gonna get rid of all the fucking illegal immigrants and bring in loads of. She's got a large stimulus package, so she basically plans to fucking flood Japan with like tons of money and try and stimulate the economy, but probably through things like giving bank loans with great percentage rates so that people will take bank loans. I mean, she'll probably give low interest rates in bank loans so that more people will take bank loans. And when more people take bank loans, what they do is they'll buy more shit. When they buy more shit, it stimulates the economy and it helps the Japanese economy grow while manufacturing is low, right? So that's like a stimulus package that she has in mind. And she'll probably do other things like she'll increase average earnings again. If you look back to last November, Japan did that as well. They increased average earnings by a lot, and then over November, December, and January, the economy kind of showed strength because of the economy being stimulated by people buying more shit because they had more money, right? That's it. Dead simple. SPPI year on year, core. Yes, we've got next week. We've got a couple of things, not lots. Core CPI year on year, we want to see that. Unemployment rate, we want to see that. Retail sales, yep. Housing starts, yep. So we want to see all these things next week. Let's look at last week. Sorry. Why does it keep doing that? I want to see last week. Hold on. Last week. What date is that? Second. Okay. Oh, it's still this week, sorry, because it changes. It should be this week, I'm looking at, my bad. It changes on a Sunday, and normally I do this on a Sunday, that's why I got confused there, but I've done it on a Saturday. Okay, that's bad news. Next week, yeah, we've got core CPI, BOG. They don't have any plan to cut the rates. Yeah, let's see what data we get. So for me, Japanese economy is still weak. I wouldn't be putting it in strong. Now you might look at it and be like, well, why is it, if you're saying it's weak, why is it going up? That's to do with risk on, risk off sentiment. It's nothing to do with the economy being strong. It's just that people are moving their currency. Whenever the USD gets bad news and people are like, fuck, like when Trump hit China with those 100% tariffs, blah, blah, blah. The markets will go to risk off, right? It means people aren't willing to take risk on the market, so they will remove their money from USD and they will put it into safe haven currencies and assets like, pardon me, Japanese yen, NZD, Swiss franc, gold, and other metals like silver, etc. That's why gold flies and all this, right? So that's what happens. That's based on market sentiment. It's not based on economy strength, okay? So Japanese yen, I've still got it in weak. USD, let's have a look at last week. This is the last one, guys. Core CPI month on month is dropped. Bearish. Bullish. CPI year on year is bullish, so that's what we want to see. That's the main one. Yeah, it's still red because it didn't come in as high as they thought, but look, it's increasing, which is fantastic. Bullish. bullish. It's still bullish because it's, even though it don't get caught out with it being red, it's still bullish because it's above 50. Strong. So yeah, USD is showing some resilience. I'm more favoured towards it being coming back to being bullish. However, I want to see a bit more data first, so I'm going to keep it in USD. I'm going to keep it in USD. I'm going to keep it in neutral. However, in my mind, guys, I'm going to keep it from being neutral to potentially switching to weak bullish. Okay, weak bullish. I'm more bullish on USD than I am bearish. Okay, so let's have a look over here. Let's have a look at Smart Bias and let's see what these guys have got. Let's just sing that. They normally change this on a Sunday or Monday, so this might not be updated from last week, and I don't think it is, so we might need to come back to that. Weak bearish, nah. Weak bullish, weak bullish. Yeah, this hasn't changed since last week, guys. They're all very similar, alright, so I think these guys tend to update this on a Sunday or a Monday, so this hasn't changed as yet, so we can't really base it on that. Right, let's come across and have a look at, let me just make this down. Let's have a look at pairs. We'll start from top to bottom. Now, I always mark up my charts on the weekly/daily time frame, right? AUD CAD, this is a good area to buy from here, but both economies are pretty shit. We've got this close here, so you could look to buy that from here. It might come back down for a liquidity grab to this area here. See that? It might come back down for a liquidity grab. It will then reject on the 200 EMA right here. That's why I've got my my what do you call it? Thing we set here, my reminder set here if it hits. Well, my alert, sorry, is what I meant to say. Because what will happen is people enter buys here, right, and then it'll go like that, fuck off. It'll pull back down for a liquidity grab in this area of value here. Small candle, large engulfing, volume breakout, blah, blah, blah. 200 EMA. It'll come back down, give a liquidity grab here. Everyone will have their stop losses here below the previous lows. It will stop everyone out. It will just fucking invoke a huge amount of liquidity, and then it will start fucking flying. So where people have put their stop losses around about here, I prefer to put my entries, and I'm going to put my stop loss below here, right? That's where I put my stop loss here. I would enter around here and put my stop loss below here. Now, if it does not pull back to here and it just continues to break up, all you're going to do is you're just going to wait for it to break above these highs. So it's going to go like that. Bang, break above, retest, and go. And then that is going to be your entry. So your entry point is either going to be here, or it's going to be here once it's broken above, came back for the retest, giving you that confirmation, and then it goes, right? That's it. It's as simple as that. AUD CHF, there's really nothing there. Look, bang. See what I'm saying? Look, previous resistance, once broken, becomes the new support. Bang, bang. We actually entered this one here. From here to here, we entered. I didn't take this because I can't remember what I was doing. I was busy last week, but I can't remember what I was doing on the date of this game. But look, there it is, straight back in that fucking zone again. You see that? It comes back, retests the zone, and away it goes. Why did it retest there? Because it's seen as good value. Value is another fucking podcast on its own, but I've got tons of videos on it, guys. I always talk about it, so you can have a look through. AUD USD, I'm neither here nor there just now with them. Both are kind of neutral-ish. Euro AUD, there's nothing there that I would take. Euro CAD, there's nothing there that I would take. I'd be waiting if it comes back down here. If we get good news on CAD and it comes strong this week only, and we get oil strength, you'll probably see that that is the catalyst to push CAD down here. But then it'll reject and then it'll start flying, and I will be waiting to enter buys. That is if Euro starts going in strong again. If Euro continues weak and this breaks below, I'll be waiting for the retest here, and I'll be looking to take sells, right? Euro CHF, there's nothing here I would take. Euro Japanese yen, nothing. But look, I did mark this up here. See it? Bang. Comes back down, retested that zone, and away it goes. I wouldn't have taken it, only because there's not a lot of value for here. I mark it up because I like to, see if my predictions have came right, and it has came right. Bang on the money. But there's just no real value for me to buy it from here, in all honesty. I want to say it's really overstretched. I like it to come back down, maybe retest this zone here, and pull off. So I can probably change that. I can probably get rid of that now because that's from ages ago. I really want to see this, boom, boom. Yeah, it's probably going to do that. Right. Ah, shit, I didn't mean that. Yeah, I'll just do that. There you go. So I'm probably going to look to re-enter it here, or it could re-enter this zone here. So what you might find is there's two potential areas. Small candle, the previous resistance, boom, boom, boom. You may also get this, right? Bish, bash, bosh, right? So there's these two potential areas for entry that you might get, okay? Euro NZD, there's really nothing that I would take. You're just looking for this again. Bang. Could take there, or it could also, bang, could also hit there, right? You're really looking for that. That's the better one. Euro USD. There's nothing really there that I would take, guys. And I'd like to see it come back down to here or down to here, right? There's enough, or it has to break above, retest, and then go, right? There's nothing I would really take there. You can see, look, there's fuck all really for my method just now, which is good because I'm away next week. GBP AUD, I'd potentially be looking for buys in this zone here. Definitely looking for buys. We've got to get rid of that. We don't need I'd definitely be looking for buys in this zone. I've already marked that up. So yeah, if this comes down here, retest, rejects, and away it goes, you could take a buy. GBP CAD, just look to the left, see what zone. So see when you've got this here, right? See when you've got all these different areas, what I look for is a main base area. So look, base area, base area, base area, right? Then it gets slightly higher, but I'd be looking for this is the main base area. This here, where it's dropped below the base area, is what? It's a liquidity grab. They're grabbing liquidity. So I'd really be looking, in my opinion, to grab this from here. Bish, bash, bosh. Drag it across. Sorry, wrong. I want it a bit here. That's what I want it. There, bang. So it could, and that pin, I'm going to put it at this top pin here. So I'm really looking for it to potentially come down. Bish, bash, bosh, right? Ah, for fuck's sake. Bish, bash, bosh. That's what we're looking for, okay? GBP CHF, there's nothing there. GJ is nothing. Look, done it again, broke away, came back for the retest, away it went. But I wouldn't have taken it because there's no value for me, right? GBP NZD is potentially a good buy. That's probably one of the more solid ones. It could come lower down to here, but yeah, this is potentially a good buy if we get some good solid news. I'm going to post that in the group right now. Give me 2 seconds. Hold on. Just so I don't forget. And this is what I do with the lads. This is our Discord group, guys. Look at the lads. Look at the guys here. Look at all their wins. Look. We have a Discord group. If you want full-time... Look, they're fucking flying. They're taking it all by themselves. If you want full-time mentorship, guys, we give it all in this group. It's not just a signals group. It's a mentorship group. Look at the guys making dough. Anthony, 824 quid. Another 1,000 quid. There we go again. Jevons. You can see all the lads make money. Let's just have a look. We give it all in the group. 240 pips. Bosh. So we give all this, right? I'm just going to put in here. Let me just scroll down. What pair is that? GBP NZD potential buys next week. Right, and what I do is I just paste it there so the guys see it. And I also, because there's a lot of chit chat on the general chat, right, and some people are going to miss that, I just copy it and I also put it into swing trade setups and I just put it there. Boom, boom. And look, I give all my setups. And when I physically enter a trade, right, I also give you the signal. Look, so you can copy the exact fucking trade that I'm taking verbatim, right? Look, trade results. Here's the guy's results from last week. There's Alex. Alex is up 6 grand last week. Look, copying the trades in the group. Alex again, 3 grand. Alex again, 1,400. There is Andre. There's Andre again. Look, it's the fucking sea of green, lads. There's Big Lee. Again, look. Flying. Alright. So if you want to join our Discord group, down below this video, you can see our link to join. If it's not there, maybe it's an older link, I can't remember, and I just don't have time to change it just now on YouTube. Jump across to our Instagram, which is The Trading Guys. It's exactly the same as YouTube. Not The Trading Guy, that's someone different. It's The Trading Guys, plural with an S, alright. GBP USD, still looking to potentially buy that or sell. Let's see what happens. Don't really have a bias on that yet. Nothing there. NZD CAD, NZD CHF, nothing there. NZD Japanese yen, you can see how many times. So it's potentially going to sell that, but both economies are shit, remember. So you look at it here, it's just ranging, right? Why is it ranging? Because both economies are weak. I don't really want to be trading both economies that are weak. I don't even want to trade two strong economies because you're still going to get the same effect of just bouncing around. That's why I choose economy which is strong and one which is weak, because then you get this. You get a downtrend or you get an uptrend. But when both are similar strengths, you just get ranging and it's dog shit. So you're just, instead of increasing your chance of having a winning trade and reducing your risk, you're actually reducing your chance of having a winning trade and increasing your risk, which is the fucking opposite of what you want to be doing, right? So why do it? Just walk away. Don't risk your money. Now look here. NZD USD. I'd be looking at sales for this. So you could sell it from here. There's not a lot of value. Let's just measure that up. Give me 1 second. Let's just measure that. 200 pips, that's alright. I mean, you could probably take sales from here. So, I would like to see it pull up, in all honesty. I would prefer to see this. Bosh. However, you might not get that, right? So you might get this, or you might just get this. Boom, boom, boom. I'll change the colour. Yeah, so there's two options. That's NZD USD. Let's have a look. I'm just going to post that to the guys before I forget. NZD USD potential sales. Paste. Post. And then I'm going to copy and paste it again. And put it in to swing trade setups. Just so the chat doesn't make it disappear, you know what I mean? Because if you just leave it in trading chat, when people put five comments in there, it's just gonna fucking disappear. USD CAD. I'd be looking at buys. I've already marked it up, so that's fine. I'd be looking at buys. Come back down here, retest, and then go. See, we already took that. We entered here, closed it here, which is fine. It came back down, and away it went. USD CHF, USD Japanese yen. Look, it came again. Look, boom. See, it breaks above. Previous resistance, once broken, becomes the new support. Every time that happens, every fucking time. 80% of the time, it happens every time. So let's have a look at dollar. Dollar's just ranging, you see, but it could potentially show strength if you really want it to break out of here. It's either break up, boom, boom, or break down, but yeah, let's see. Oil, for me, is still massively fucking bearish. You're going to enter sales from here, or you're going to let it come up, retest this one here, and then melt. I personally would not be entering buys on oil right now. I just wouldn't be doing it. For buys, what you need to see good solid data. You need to see it break above here, come back and retest, enter, and away you go, right? That's what you need. To enter buys, you need this to fucking play out like that. Right, it might not go as high as that, obviously, it might just go to here, but you get the point, right? You need this to play out for buys, and that's going to be your entry. If it just comes here, up until this point, unless it breaks this, you are sales all day long, right? Don't fucking buy it. Gold, I'm really just scalping gold in the kind of 1 hour, 30-minute time frame, along with the rest of the guys. Gave some good moves. As you can see, look, I caught this yesterday. I caught the sell here, closed it here, which was perfect timing because it fucking flew after that. But yeah, it's just kind of rangey at the moment, so you'd need to see it break out of that range. Silver, I'm only be looking for buy. This is a great fucking area to buy from on silver, guys, but it's ranging just now, right? We could see silver pull down to here, right? So you just need to fucking wait, hold on. and see what it does. Copper, again, I'm just looking for buys, but I can't buy from here because there's no value to buy from it, right? You potentially see it coming down here, this zone here, rejecting, and then buy, right? So you want to be buying around to about here. And that is pretty much it, guys. That is all for me. I'm going to be away this week until Wednesday. So, yeah, I'm Ryan Mack. This is Trading Guys. Thank you very much for watching. If you like these... What the fuck just happened there? Why did that stop? If you like these videos and they are beneficial for you, then come and join us.